Good morning. It's Thursday, 11 July 2024. Welcome to yet another pre-market commentary. Your host is Vijay here. Uh, Yesterday, the long-awaited correction came, and it scared a lot of people. People panicked. The reasons of the alluded reasons were that NSE MTF, that is the margin trading facility, is going to be reduced across the board. About 2,000 scripts are allowed for margin trading facility. That would now they would bring it down to around 700. So more than 1,000 scripts will go away from the margin trading facility. Margin trading facility essentially is where you give the shares to the broker and he gives you exposure. The broker then in turn gives the shares to the clearing corporation. So back to back, there is the system is safe to that extent, and they give an exposure only in terms of percentages. So that was the initial fear. There was another fear, which was RBI apparently in their inspection of banks found that lakhs of fraudulent accounts were there. So that was another one which was an excuse to sell off. So while it opened higher, made an all-time high, Nifty, and then it started falling. At one time, it was down by about 300 points. And Bank Nifty also was down by about close to 500 points. End of the day, Nifty closed down minus 100 points, and Bank Nifty closed minus 380 points. I have been mentioning that one of the ways to trade this market, actually the only way to trade this market, is trying to put stop losses, trailing stop losses. For the Nifty, I had mentioned that it would be around 24,000, 23,000, what was that? 24,200. So 24,200 on a closing basis for a couple of days, then then intermediate downtrend has started. So yesterday it moved below that, but then it has bounced back and closed at 24,300. Now, what's happened later has been that there has been a clarification by one of the biggest players in this MTF, HDFC Securities, who said it will not affect. Anyway, it is graded kind of reduction, which means on August 1st, what 40% will go away in terms of the number of scripts where margin trading facility is available. And then gradually on you have August 1st, September 1st, October 1st, and November 1st, entire 100% of that 1,700 will go away. So there is nothing to fear on MTF till at least August 1st. Now, in between, we have the union budget. So therefore, the people, the traders would look forward to the union budget first and then worry about the shortage of stocks in the MTF facility. Now, what did the institutions do? Both the institutions grabbed stocks with both their hands. FIS bought about close to 600 crores, and DIS bought about 1,000 and odd crores. Yesterday, while there was general mayhem in the market, the advance decline showed 75 to 25. That is, 75 stocks declined for every 25 which advanced. But yet, you saw that railways did very well, RVNL kind of stocks. You also had some disasters like M&M, which fell about 7% because they reduced prices. And you had this Maruti, which went up like anything in the morning. And it was a classic case of distribution, in my opinion. And then it is closed in the negative. Whenever a stock does this with extraordinary volume and closes in the negative, then you can be sure that the smart guys have gotten out. It is quite possible, because it's a bull market, that the prices may still go up and try to hit the yesterday's high. But I would be careful in buying into Maruti. In fact, we shorted Maruti on an intraday basis and made some money. Now, yesterday we also bought Bliss GVS Pharma at 111 odd, and bought Infibeam at around 31. So these are low-priced, low PE stocks, which we feel will do well in this roaring bull market. So yesterday, a lot of scaremongers were there. The prices showed in the final hour that Jo dar gaya, so mar gaya. Now, the reason why I'm saying this is always look at this market in two parts. The first 1 hour is where the amateurs open the market and trade. The last 1 hour is left to the professionals. So what the professionals do at the end of the day will tell you what will happen next day. Yesterday, a lot of people were thinking that the market will come down at the end of the day. In fact, at one point of time, it was 200 points down on the Nifty, but it bounced back to close only 100 points lower. Same thing with Bank Nifty. Clearly, both of them have traded and closed above the VWAP. VWAP is volume weighted average price, and that clearly bodes well for the Indian market today, independent of what the global markets were doing. Of course, the global markets helped in a great will help us in a great manner because Europe was very strong yesterday, and the baton was passed on to US. Dow Jones hit about 430 points up. Then Standard Poor was close to 60 points, and Nasdaq was about 200 points plus. Now taking the baton again from US, it goes to Asia. Nikkei is up 350 points. The Hang Seng, which is a laggard, is up about 200 points. The other things with the fly in the ointment, as I call them, which can derail the equity run, like DXY, oil, gold, silver, were all range bound. So long as they're range bound, I think the equity bulls need not fear. So that is what it is. And today is also the weekly expiry for Nifty. So expect some sort of volatility between 1 and 2. And I think Nifty should close significantly in the positive, though lots of people, the gurus, are giving targets saying that Nifty will not cross 24,500. We are no one to give targets. Only we can only react and not, let's say, proactively, we can't do much. Let us see how the prices pan out. As far as we are concerned, we are buying into pharma and textiles right now, looking at mid-sized, low PE pharma and textile companies. I mentioned Bliss GVS Pharma, which is having a good, what shall I say, chart as well as fundamentals. Same thing with Infibeam. And in textiles, we have been buying for last 15 days. We are now waiting. Nothing much has happened, but I think something is likely to happen in the near future. So today we can go with confidence that we have taken care of the obstacles of yesterday, which was the NSE issue as well as the RBI issue, and maybe steer clear of banks, private sector banks, which are still under pressure. Public sector banks are not under so much pressure. Private sector banks, especially HDFC Bank, is under pressure because I think another foreign brokerage downgraded HDFC Bank. But ICICI Bank, Axis Bank seem to be doing well. Kotak Bank is the dark horse. Reliance is, of course, always there to perk up the market. This close of today, after the close, you have the TCS results. So it will be interesting to watch how TCS will behave. We have bought TCS for a very short-term basis at the close of yesterday, and we hope to expect some high. We are expecting some higher prices in the coming days. I don't know what will happen tomorrow or today, but we hope we'll get some better prices. We are generally not so bullish on private sector banks, especially HDFC Bank. We are not bullish on autos, but we are bullish on pharma. We are bullish on the textiles. FMCG is doing well. Public sector index is doing well. Railways are doing well. RVNL and all are shooting up, but we are not in that sector because personally I feel very uncomfortable. So what I would only recommend is that weigh the market based on prices rather than our ego, and keep our trailing stop loss, which I mentioned, that is 24,200 on a closing basis for a couple of days on the Nifty, and 52,000 closing basis for a couple of days on the Bank Nifty. With that, let's march ahead. Whatever you do today, I hope it is successful. Thank you for joining me. Good day.